In this video, traders, I want to talk about the curse of the lower time frame. Stick around. Hey traders, warm welcome to you. So if you're looking for Johnny Depp, unfortunately it's not, it's me, it's Mark, but it's not the curse of the black pearl, it's the curse of the lower time frames. So what do I mean by the curse of the lower time frames? I think any active trader, we have this propensity to go down time frames to try to get a more accurate view of what's happening. And that makes sense, right, to a certain extent. I mean, I think when we go too far, you're kind of in the real noise areas unless you're really actively scalping. But what we're trying to do here is we're trying to say, okay, listen, 15-minute chart, if I can go down to a 5, I get 5 times as much data. If I go down to a 1, I get 15 times as much data. If I'm trying to execute a trade, then I need to see the little structure on the 1-minute chart or the 2-minute or the 3-minute, whatever it is. And we get so focused on that because there is some validity to that argument, right? The validity is, hey, you know, I can see so much more, and if I'm trading intraday, why would I not want to see some of these little nuances? Because ultimately, you know, we get quite a big move in a minute. So, you know, sometimes in trading, that minute might be kind of the difference between a great trade and a bad trade. So do I really need that 15-minute chart? And so we tend to slip down into that. And in a way, there's nothing wrong with it, because if you use it as the tool that it's meant to be, it can be very valuable. I think the best way to use it, maybe I'm skipping ahead here, the best way to use it is, okay, let me use it specifically as a tool for execution purposes and then run straight back up to the higher time frame. Because you can still see, right, the patterns, you can still see the price move, you can still kind of tape read per se, you're not looking at the market depth and the time and sales, but you can still see how price moves and moves ups and down. And yeah, it's creating a 15-minute chart over that 15-minute time period, which is slightly different obviously from the 1 minute, 15 times as slow, obviously, but you can still kind of get an idea of how quickly it's moving if you're actively watching it. But put that to one side for the moment. Let's imagine you go down the time frames. So when we go down the time frames, there's a couple of things that can happen, and we can fall into this trap and the curse just hits us. And that is that we get so blinkered with what we're seeing on the lower time frame, we forget completely what's happened in the higher time frame. Now, even if you're Mr. Diligent and you're like, hey, I'm going to do my prep, I'm going to recognize where we are on the daily, I'm going to recognize where we are here, this, that, and the other, I know all the structure. Some reason, as soon as we get down to that lower time frame, it all goes down the window, and we're so myopic and focused on this one idea we've got that might only be over a 30-minute window we're looking at. And we're kind of missing stuff. So imagine this is your 1-minute time frame. You're like, oh yeah, you know, look at this. I've got a downtrend here. Let's use a nice red for a downtrend. I've got a downtrend here. We've broken out this low here. Man, I'm going to smash that bid because this thing's just going to fall through the floor. And then you're there and you're selling short here. You're like, bang, sell short. In 50 lots, straight, and then the thing's going to collapse. I'm just going to have, you know, 4 or 5 minutes of run, and you're kind of looking and watching, and you see, and you might even see urgency, right? You might even see that breakthrough and go, a bit of urgency in a 1 minute because it's still a 1-minute support. It's still going to be a little liquidity vacuum. Still be some orders triggered, but you're missing maybe this bigger time frame here, this higher time frame here, which is basically a completely different idea and a different trade. So imagine this is now your 15-minute chart, and that little bit here is this bit here. Now that may be looking like it's kind of breaking through this small area, but actually it's such a big level that you think, hang on a second, there's a massive level there. We've just trickled down here, haven't really got any force. Do I really want to be selling that straight away? Do I really want to? It's been holding. We've been an uptrend here. It looks like a flag type pattern. On here, it looks like death. It looks like what? And especially on the short side, guys. You know, traders, intraday traders, love the short side because it's quick. You get paid quickly. It's just a sexy way to trade short. You just feel like things happen so much quicker, right? So we get caught in this. We get sucked into this, and off we go. But we forget and we misjudge the fact that actually, look, the whole thing is just building for an absolute, you know, springboard back up, and this is probably going to be one of Wyckoff spring type things that dips over and then just poof, blasts off. Now there's nothing wrong, I don't think, with trading and scalping that if that's your game. But then again, you can get so caught up in not seeing, are you not better aligning yourself with that higher time frame idea and saying, hey, that could be setting up as a spring type trade. I want to look to be kind of buying this and letting everyone get so sucked into that 15-20 minutes worth of trade. I'm going to step back, look at the bigger picture. Yes, I want to see how that behaves because that's going to help me time it. The better sweet spot I can get on this. Maybe I see bids coming in here and I can use a 1 minute stop, but actually go to the higher time frame to look for the bigger theme and kind of end up thinking about having a target right up here rather than just trying to grab a little chunk out of it. But that's the kind of the vision I think is a better way to approach it, because we get it just becomes this thing that envelops us when we're in that lower time frame, and all we can see is that tick 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 and that little red, little green, and then you get a red candle, and then 1 minute later you're watching that green, and there's so much emotion attached to the color of the candle. And you're thinking, and when you think about what you're doing there, you're actually 1 minute worth of trade, which is an arbitrary minute, right? The top of the hour is top of the minute, sorry, it's just a nothing thing, right? It's nothing, but has to be. That's the way that a candle is printed, right? It's from 1 minute to the next minute, to the next minute, to the next minute. But it's such an arbitrary, meaningless thing. Someone could come in and buy 100 lot or something and stagger it, take the price up 4 or 5 ticks, just a normal order, and that looks like a massive, big, buy, bullish, engulfing candle in the 1 minute, and you're all in, and it's just a nothing. So, and that can be valuable if you're like in a specific area, like an exhaustion area, and you see that and you time it on that for sure. But the curse is when we get so blinkered and blinded by the fact that we steal this action. I think that the key is to constantly evaluate and say, hey, listen, what am I doing? What's the higher time frame? I set a timer. I've got a timer that often goes off and goes, just check, and it didn't necessarily say check. It's just a little circuit breaker that just did, and it goes. I go, right, where are we in the big picture? What am I trying to do? Wait, I'm trying to force a short trade on a mate. Come on, this isn't really the right type of trade. And maybe it is fine, but it sometimes makes you stop and go, hang on a second. That's not the trade to be taken here. Maybe you have got a short thesis, but pressing it on that after it's just breaking through and it's at lunchtime and maybe there's some things aren't ending up. No, come on. Think a bit more clever about that. Play the game of chess. Don't play checkers, play chess. Think about it, step back. Look at the higher time frame. Is that the play I want? How can I structure the trade? And that, I think, allows your trader brain to really become developed and really think more clearly about the ideas and the trade and the structure and the operational things, as opposed to the lower time frame curse, which just triggers that chimp brain where you're like, oh, I'm going to trade. The lizard brain's like, I'm going to short this, and you get so caught in the flashing lights and this, that, and the other, and it just sucks us in. With human beings, right? Anyone knows if you've gone on social media, you can get sucked into scrolling through Instagram or YouTube or TikTok or any of these things, because it's just your brain going, oh look, man riding motorcycle, oh look, guy doing donuts in a BMW, oh look, and whatever it may be, whatever sort of things come up. But you get the idea. It's almost that to a certain extent. Your brain is hijacked with this curse of the lower time frame, and you're kind of looking, and all you're seeing is red, green, red, green. And before you know it, you're making decisions based on what you're seeing there, rather than going, whoa, come on, come back here, come on, taking yourself back up from the ledge and going, look at the bigger picture. Is that the trade you want to take? And if the answer is still yes, that's fine, but very often the answer is no. Take care, keep your risk managed, watch out for the lower time frame curse. See you in the next one, bye bye.